Hello, trading is closed on November 9th, 2021. This is my trading plan for tomorrow, November 10th. Please remember I can be completely wrong. Trade at your own risk. My last call came after the close on Friday. Made the case for a short-term high. It's held for 2 days, but the drop hasn't been all that dramatic. So the ideal situation would be a strong drop right from the open, and if that didn't happen, the call might not work. It gapped up smartly, and the rules say that kills the call before the open. We had a weak pattern yesterday with an early low, which tends to lead to additional weakness, which we got today. This is also an early low pattern. Tomorrow should have the early high. Someone told me the price of my MEJT webinar wasn't on PayPal. I didn't realize that. It's $57. It's also a book which explains the rules, and it costs less. Different booksellers charge different amounts. It's usually between $40 and $50. Early on, MEJT said ultimately both higher and lower prices would print. We got the higher, we got lower. Each move is said to be false, should retrace, and it already has. Well, this is a pattern called the 2B top. Here's the high. The actual true range starts from the close on the previous day, and when you trade under that price, which we did here, that level, it's supposed to give a sell signal. It's not a flawless system, but has some validity. It would be a lot more impressive to me how we closed under that price instead of over it. But if we gap under that price, 46, 74, 54, all will be forgiven, even though according to the methodology of this system of somebody else, it still is a valid sell signal. The drop from this high, if it was going to be a significant high, would be a lot clearer if it were non-overlapping and impulsive. It's clearly overlapping, has the action of a corrective wave. If that's A, it's easy to count this as C equal to A. So even though futures are down, if this level holds, you could say that's the first leg. I don't know if that's going to hold or not, but it's not as aggressive a drop as I would anticipate seeing if we were going to have a collapse from here. You can still make a case for lower prices printing, but regardless of how low we go, I look for them to be recovered before the year's out. Signals are mixed. Tomorrow's pattern has the early high. We could still get down. Typically, it's a rally day, final hour high. Failure is a straight line drop. It's positive after the early drop. We closed over the intraday lows, but it's negative. We have a 2B sell signal. The decline from the all-time high has so far been overlapping in just a minor blip. If a sizable correction were to occur, it would have been preferable for them to have been a strong impulse down. Argument for a temporary top here still is a valid argument, but the drop may not be too severe. And in any event, I think we trade higher before the year's out. So tomorrow has the early high. Typically it's a rally day, but if you fail, it's a straight line drop. Usually you find out before the first hour is over which of the two it's going to be. Possible high here, but even if we drop some more, I don't think it is the high, and we should see higher prices. You're a little bit patient and can wait until year end. Tomorrow has the early high, and that's today's call.